The stock market is at an all-time high. Companies are worth trillions of dollars. Billionaires are getting even richer. So here's the question. If America is making so much money, why do millions of Americans still feel broke? It doesn't make sense unless you've been looking at the wrong number. Today, I'm going to show you why Wall Street can celebrate while Main Street struggles. And once you understand this, you'll never look at the stock market the same way again. Every day, you hear headlines like, "The stock market hit another record. The S&P 500 is soaring. Investors made billions today." It sounds like everyone is getting richer. But then you step outside. People are struggling with rent. Groceries cost more. Credit card debt keeps growing. Many families are living paycheck to paycheck. So, who is actually getting richer? Here's the first thing most people don't realize. The stock market isn't the economy. Read that again. The stock market is not the economy. It's only a collection of companies whose shares people buy and sell. And here's where things get interesting. Not every American owns a meaningful amount of stocks. Many people own little or none at all, which means when the market goes up, a huge number of families barely benefit. But that's only half the story, because something even bigger is happening behind the scenes. The richest people don't just own stocks. They own millions, sometimes billions, worth of stocks. So when the market rises by just a few percent, their wealth can increase by millions of dollars in a single day. Meanwhile, someone earning a normal salary may not feel any difference at all. Now here's the biggest misconception. People think, when the stock market goes up, everyone gets richer. That's simply not how it works, because the money isn't distributed equally. And that's exactly where the real story begins. So, if the stock market isn't the economy, then why does it keep breaking records? The answer starts with one simple word: profits. The stock market doesn't reward hard work. It rewards profitable companies. Imagine two Americans. The first works 10 hours a day, pays rent, buys groceries, and struggles to save money. The second owns shares in companies like Apple, Microsoft, Nvidia, or Amazon. Now imagine those companies make record profits. What happens? Their stock prices usually rise. The shareholder becomes richer without working extra hours. This is why wealth grows differently from income. Income comes from your job. Wealth grows from the assets you own. And that's a huge difference. Now let's talk about something called the S&P 500. This index tracks America's biggest companies. When these giant companies grow, the S&P 500 climbs. News channels celebrate. Markets are at record highs. But here's what they don't tell you. Most of that growth often comes from only a handful of giant companies. If companies like Apple, Microsoft, Nvidia, Amazon, or Meta rise sharply,